Hello guys, welcome to the Saturday webinar. So let's begin. For those who are new here, Saturday webinar is a more structured webinar lah. Okay, it's more of like I talk, you listen, that kind of webinar lah. Okay, and this will also be recorded and uploaded onto Discord and onto Patreon also. So on Discord, you can access the webinar recording from this thread itself. I will post the recording like here lah, okay? So if you want to look at all the past webinar recording, you can also click and then there will be a recording here, okay? So let's begin by sort of recapping this week. So overall this week, right, is actually a very, very bullish week, okay? So now I am on a weekly time frame on NASDAQ 100 and also on the S&P 500. It seems like a very bullish week, okay? You have a very obvious pin bar coming in and it is bouncing off this very nice trend line and also at the support level here, okay? So despite what is being called the Black Monday or the fear and doom, right? The market actually rebounded very, very well. So overall, I am not really that bearish, but I'm not overly bullish either, okay? There are some economic data that suggest some weakness coming in the economy, but so far, right, from what I can see, it has not reflected in the stock market yet. Most of the stocks that are going down are actually all the tech stock or the AI stock, which were very overinflated in the first place. Okay, so they are kind of like going back down to sort of like their fair value. But in fact, I would say even considering the fair value, right, there's still a lot of growth that is justified in all these stocks, okay? But we do have the unemployment rate going up to 4.3%, which is a little dangerous. The market kind of spooked a bit on that unemployment data and the market just went down after the NFP data, okay? But this Monday, right, we saw the ISM service report showing a rebound back to growth state. The economy has rebound back into growth state. Again, the service sector is hiring more people. So I will expect the next unemployment data to kind of go back down to perhaps 4.2, 4.1% like that, okay? So things are not all doom and gloom, so don't become the doomsayers spreading all sorts of nonsense like, oh my god, market gonna crash 30%, 40%, what generational buying opportunity. I don't think all those stuff are going to happen now. So now if you compare the current market state back to 2007, 2008, the housing crisis, and all the way back to the dot-com bubble, right? There are a few things that is different, and that is in the current situation, the earnings of most of the company is actually doing very, very well. Even the home builder sector earnings are still, I will consider strong, okay? Yes, perhaps the stocks are overinflated a bit, but the earning is there to support those kind of stock prices, which is very different from what is being seen in 2008 and the 2000 dot-com bubble, okay? So we cannot just look back into the past and say, oh, back then this one like that, so now it must be like that. Because for every financial crisis, right, the trigger is different. The trigger is very, very different. Even back in last year, there were two banks that blew up in US, the Silicon Valley Bank and the First Republic Bank. They blew up and everybody is expecting the market to crash. But Federal Reserve immediately stepped in to sort of save this company, okay? And JP Morgan actually bought out the company. So the market was kind of like safe. But a lot of people are saying, oh, like, wow, manipulation, wow, buy out this, buy out that. But if those buyout didn't happen, right, a lot of people are going to suffer. For example, there are average people like you and me who is going to the bank to withdraw $100 to pay rent, buy groceries, all this kind of stuff, right? When First Republic Bank blew up, there were people like average people who couldn't buy grocery for the week because the bank simply don't allow any withdrawal of money. And that's the reason why Federal Reserve need to step in to save. And what I am trying to say is that in this current environment, the Federal Reserve is more responsive. They are more, I would say, aware of what is going on, unlike in the past. In the past, right, they take like 2-3 weeks to respond to the market crisis, and by the time they respond, right, the market already like crash until don't know where really lah. Okay, so because of that, right, there's a lot of factor in play that we simply cannot quantify lah. Okay, so in summary, right, don't be overly doom and gloom. Things are still all right lah. Okay, in fact, in Singapore, a lot of people have been waiting for economy recession, like wait from 2020, 2019 until now. They are still waiting. I got people waiting for recession to buy their house, but the house that they want to buy right now already double in price. So even if the recession happened, I think the housing price will be still higher than what he originally expect to buy lah. Okay, so don't do those kind of funny things. Okay, so now let's go into my portfolio a bit. So currently right now, my close position, these are close position now. Okay, I am up 62% for the year. So I started off the year with $200,000 USD. Currently, I'm sitting at around $324,000 like that. Okay, but I am going to show you my open position. So don't be shocked, okay? Because the number may look a little bit scary, but there are proper explanation to why the number is like that lah. So you can see here my open position, my floating P&L is somewhere around -40,000 now. Okay, it is down by about 12% like that. So now there are a few explanation to this, and that is for the month of August, right? For the month of August and for the last few days of July, right? I have actually I've actually took profit on a lot of the winning position. You can see there were five position here that I actually took profit, and all these 5 positions are actually big wins lah. Okay, so you can see here at the bottom right there, right, this 5 position alone account for $61,000 in profit. So now the reason why you are seeing this big loss here is that all the profitable position that were initially part of my open position, right, they have been closed out. So what is left here is all the losing position now. Okay, so if I were to count the net winning, right, I am still up by about $20,000 because I have about $60,000 plus here in profit. And if I account for this -$40,000 loss, right, I'm still net $20,000 in profit, which is still quite a substantial amount. If I consider $20,000 on my starting capital, right, that is still a 10% gain for the overall week lah. Okay, even if I consider this loss lah. Okay, so now even if I were to sort of like exit all my position now and eat the loss, right, I will still be up 50% for the year, which is still a very good performance lah. Okay, so now on top of that, right, there is another thing that's going on here, and that is my micron position. My micron position is the first position that I actually increased my risk. I used to take about $4,000, $5,000 USD risk in a single position, but micron is the first position that I increased my risk to $10,000. And unfortunately, the very first trade that I increased my risk, right, is it ended up in a loss lah. So I mean, bopian, I have to eat the loss. And another trade is actually this trade, SMCI. SMCI is the cash secured put lah. Okay, it is this one, cash secured put SMCI, which I entered very recently, only like a few days ago before the earnings. So when the earnings came out, SMCI actually crashed lah. Okay, because of that, I'm down about $10,000. But SMCI is a cash secured put, and the strike price is at $500. So as long as by expiration, and the expiration is in September 20th lah. Okay, so if by September 20th, right, if SMCI remain above $500, meaning if it continue to rebound or if it start to go sideways, right, I will be able to get $10,000 worth of premium. So if I put this to 0, I will be able to get $10,000 worth of premium lah. So that is still a very high probability of me getting $10,000 profit from SMCI as long as market don't go super duper bearish lah. Okay, so now that is to say that there is about $20,000 swing that could potentially happen, where from a negative $10,000 loss, right, I can actually go into $10,000 profit. Or if in any cases, if SMCI were to go below 500, I will take the assignment and I will start selling covered calls, which will bring in a lot more profit in the future also lah. So the thing with a cash secured put strategy is that the profit doesn't come in straight. The profit actually increase as your option decay towards your expiration date lah. Okay, so with all these factors combined, right, I don't really think this is something that I need to worry about, so I'm just gonna leave it there lah. Okay, not only that, right, we have actually entered quite a number of positions in the past few days. So, and on top of which, I got a lot of positions which I consider them as a gone case already, meaning I'm going to take the losses on this position. But these positions are still hanging around simply because I am waiting for the option to expire. Because I do not want to sell these stocks or sell this option because it will incur commission costs. If I let it expire by itself, right, then I'm not going to incur commission, okay? And because I am playing such a big position and I'm playing so many option contracts, right, the commission is quite substantial to me. Even right now, I have incurred about more than $2,000 commission cost over the year, okay, over this particular year. So it's actually quite a substantial saving if I can save on the commission alone. Okay, so you can see this stretch of stocks that I have highlighted, right? These are all stocks that, these are all positions that I deem them gone case ready, but I am still holding on to the position mainly because I want to let them expire. Okay, so once again, don't get too scared by this number. In fact, even this is, if this is a like a true real loss, right, it is pulling my overall portfolio down about 12%, which is still all right. So my threshold is somewhere around 15 to 20%. If my open position is losing more than 20% of my portfolio, right, then it shows that there's something wrong with my portfolio management already. Okay, and it is the kind of threshold that you yourself should be looking out for also. So now Bumble, I hope most of you managed to get the Bumble trade. So I've already TP'd the one that is on strike $7. If you are following the Bumble thread, right, you should be very aware already. Okay, most of us have actually TP on the $7 strike, but the $5 strike, I am still holding on to it. So I've TP this one, but I am still holding on to this one. Okay, so for the $10 strike, right, the profit is about $8,700. In fact, I managed to TP at $1.95 for the option. Most of you managed to TP much higher. Okay, I saw some people TP like $2 plus, which means you should get a lot more profit than what I have gotten here. So the next one is MLI, Mueller Industry. So Mueller Industry was actually spotted by one of our Patreon members, and as I was looking at it, right, I thought actually this is quite a good counter to short also, so why not? Okay, so now Mueller Industry kind of like recover a bit after we place our short position, but I wouldn't be too worried. Okay, so you just play according to the stop loss level given. If it hit the stop loss, then of course you take your loss. Okay, you don't sit there like waiting for instruction like that. Please take your loss. Okay, once it hit the stop loss. But if it is not hitting the stop loss, then you can just continue to hold on to it. And the next one, Wingstop. Wingstop, same thing also. It is one of the short position on the what do you call that, the restaurant sector. So after we enter, right, it recover a bit, but I'm just gonna leave it there, okay, because this if it is going to fall, right, it will probably take a bit more time for it to go down. So we cannot expect enter ready then immediately expect the stock to fall. So I'm just going to leave it there. So you can see that Mueller Industry, I'm losing about 2005 on my open position. Wingstop, I'm losing about 3002 on my open position. And these are numbers that I can actually stomach. I mean, when I look at this, right, I'm not like, oh my God, I'm losing so much, I need to do something. I am not under that kind of pressure, mainly because these two losses come up to about $5,000, and $5,000 on my overall capital is a very tiny amount. Okay, so you should be trading with the lot sizing that you are comfortable with. You cannot expect to have like a $10,000 account and then you expect $2,000-3,000 profit on every trade like that. That's simply not possible because you are going to take a lot more risk and your holding power is not there already. Okay, so SMCI I mentioned already, but some of you may be confused how come I got strike 500, but on my trade I actually put strike 410. It's very simple because I got greedy. I got a little bit greedy and then I went for strike 500 instead of 400. Okay, so if I were to go for strike 410, right, given my lot sizing, I will only get profit about $5,000. But by going for strike 500, the premium is a lot higher at $20 per share. So I will be able to get $10,000 if this particular option expire worthless. Okay, so it is neither a good play nor a bad play. It is more about greed versus being more risk adverse, but in this case I decide to be greedy. So for those who are familiar with my style of trade, right, most of the time I will always choose a greedy position, a greedy choice, because I can risk the trade. I'm willing to risk the trade for a greedier position. Okay, and that's also the reason why sometimes you will see me holding certain position and I tend to get very big profit. If you want to get extremely big profit, like something like $18,000, $13,000, $13,000 like that, right? You must be greedy and you must be willing to risk. So a lot of people will say, wow, Zor, you lucky, this or that. Actually, it has nothing to do with luck. It's because I accept the risk and I choose to hold on to the position. Okay. So the next one, AA is Alcoa. It is the latest trade that we enter. Alcoa is a long position. So now we have quite a number of short position on industry sector. Okay, for example, like the Mueller industry, we have some short position. So this Alcoa is hedging. Okay, it's a hedging against Mueller industry because Mueller industry is a fabricated metal. They are doing copper and Alcoa is doing aluminum. So one of it have to go profit. Okay, so as long as you cut the loser short, you let the winner run, right? The net will be still profitable on these two stock. Okay, so that's Mueller industry. KBH, I'm still holding this one, you all know already. So this whole bunch here, right? I'm not gonna explain so much. Okay, most of them have gone up or gone down until I don't think we can be profitable by expiration. For example, the very first IWM trade that we took like from very long time ago is going to expire next Friday, 16th of August, next Friday. So I've already put this to zero. So I'm losing about 2008. Chewy, unfortunately, is going to lose money also. So the risk is about $5,000 here. And Micron, okay, Micron, right? The what do you call that? The expiration is on October. So it is still very far away. October is still very far away. But looking from the stock price, right? Looking from how far it has gone down, right? And you look at my strike is 155. 155 is like here. It's like right at the top because I was expecting the stock to go up like that from here. Our entry was here, okay? I was expecting the stock to recover like that, but instead it went all the way down. So from here until 155, right? I think even if we hold until October, it is not that high probability. I wouldn't say impossible. Maybe some miracle can happen and it just shoot all the way up. We don't know. But it is on the more improbable side, okay? Which is why I sort of deem it as zero also because I will consider this as a loss already. But I am still going to hold it because I mean miracles can still happen. Okay, never say never. Miracles still can happen. And if it was some reason it recover all the way back up to 155, right? Then it's good. It's good because sometimes, right, you don't have to be profitable to earn money. Even if I can turn this into a break even, or even if I can turn a $11,000 loss to a $5,000 loss, right? That $5,000 is still considered profit to me. Okay, so that's the reason why I'm still holding. And then we have Eplovin. So Eplovin, unfortunately, is going to be a losing trade also, mainly because the option is going to expire in the upcoming week. Okay, the option is going to expire in the upcoming week. But I would say that for Eplovin, right, there is actually quite a good chance that, not a good chance, that there is somewhat a chance that it can shoot up some more, okay, and it can go into profit. I think it is possible because our Eplovin strike is at 85, which is somewhere around here. So it's not that far off. And Eplovin is a very volatile counter also. And in the upcoming week, right, we have inflation data coming out. So it can somewhat push this counter up if the market were to go into a super duper recovery mode, okay? Because you saw Nasdaq at the support level, right, with a very, very big pin bar on a weekly. So if Nasdaq decide to like recover very aggressively in the upcoming week due to inflation data, due to PPI data or housing permit data, right, then Eplovin can like just shoot up and become profitable also, okay? So even though I pay it down to 0, right, this one I'm still hoping some miracle can happen lah. Okay, the next one, McDonald kind of went back down a bit, so you can see from $7,000 in profit become like $1,000, but McDonald I will still hold lah. Okay, Pfizer unfortunately also expiring next Friday, and strike price at $31. I find it a little bit hard to hit lah. Okay, currently right now it is at $28, and then the price action seems to be going down. So most likely what I will be doing with Pfizer is that I will take the loss, and then I'll probably re-enter another call option again with a much longer expiration lah. Okay, so that's for Pfizer. Then the rest of the stuff I'm not going to say already lah. Okay, Hershey, Sets, and Allogene waiting for the short squeeze to happen. Then we have Sets, which I will hold long term lah. Okay, I'm still holding that, but I have actually TP my first half lah. The first half of the first half of the Sets I already TP somewhere around the high like that. So this one I have shared with you guys also. So hopefully you manage to cash out something from Set before it actually go down lah. Okay. So another thing I want to share, sort of emphasize is that I don't avoid losses. I don't avoid showing my losses, because losses are part and parcel of trading. And the thing about being a good trader is that it's not how you make profit, because if the market is running, right, anybody can make profit. It is how during these periods where market does a very, very sharp sell down or a sharp correction, right, it is how you manage these pocket periods of risk events, and then how you recover from it lah. Okay, so in this case here, right, yes, I'm losing about $40,000 on my open position, but I have also successfully TP'd $61,000 in profit. So I would say that I managed this period very, very well, where the market actually fell quite sharply from the high lah. Okay, so if you are looking at Nasdaq, right, let's not include this week, but if you look back 3 weeks ago, right, market was really, really crashing. But even though it was crashing hard, right, we were still able to TP a lot from Dynamac, SMG, Lumen Technology, AMR, and of course, lastly, Bumble lah. Okay, so it is how you manage your portfolio during these pocket periods of sharp drawdown. And if this drawdown cause you to blow your account, you lose like 50% of your total account, right? Then it is a learning moment lah. Okay, you should stop trading. You should go and review back your lot sizing strategy. Are you holding too many long position? Are you holding like over exposure on tech counters? Those kind of stuff lah. Okay, because as you can see from my portfolio, right, I will always have a mixture of long and short position, on top of which, right, I will ensure that my position are very well diversified across all sectors. Okay, if I have a metal fabrication stock long position, I will also have a metal fabrication short position between Alcoa and Mueller Industry. If I have a restaurant sector long in McDonald, I will have a restaurant sector short in Wingstop. Okay, so all these kind of thing, right, you have to hedge your portfolio very, very well, and cut the losers and let the winner run. Okay, so all this stuff, right, it will definitely be taught in detail within my course if you are coming for the course. Because right now, what I'm showing you is a live example of what is going on. Because all this kind of live movement of portfolio, right, I can't show you in a course. Because a course, I can teach you theory, I can give you PowerPoints. But all this kind of stuff, right, on the job decision that you have to make, right, I can only show it through Patreon okay, weekly portfolio update because I can't show it to you through like a one course PowerPoint sessions okay. So hopefully you can sort of understand what's going on with my portfolio. And what you will also notice is that I have increased the number of bearish position, but in the upcoming week, right, I have a lot of position expiring. So I also need to account for all the position that are expiring on the 16th of August. And then I will need to determine whether I need more long position or I need more short position. Okay, so I do have quite a number of long and short position that I have shortlisted. So it is up to you on how you take all these position and manage your portfolio. Okay, guys. So now going forward, I have a few trade that I am looking at. But firstly, right, let's take a look at the earnings for upcoming week okay. So as I mentioned, right, not a lot of earnings except for Home Depot on Tuesday and C on Tuesday, and then on Thursday we have Walmart, Alibaba, JD.com, John Deere, Grab, and Applied Material okay. So I think there's a lot more stuff coming in on Thursday, but there's only two counter that I sort of interested for Tuesday On holding is also coming out on Tuesday if you all somehow still have on holding okay. So now Barrick Gold is also good to take a look because it is a gold mining counter, and gold have been bullish for quite some time already okay. If you look at it on a slightly longer term, on a weekly chart, right, gold has been quite bullish. So I will be quite interested to see how Barrick Gold is doing also. So you can see on a weekly time frame, right, gold is very, very bullish I think it can go up a lot higher also. So now, before I share some of my trade, right, I just want to show you for the newer folks okay, the kind of thought process, the kind of effort that goes through before we actually take a trade. So you can see this is actually my company Google Drive folder, and Felicia is one of my employee who is doing a lot of trade ideas okay. So she will find trades, she will look at all the fundamentals, everything, and then she will put it in a trade report. So this is actually a trade report document, and she will send it to me, and then I will look at the document, and then I will see whether like if she have done a good job, or if she have done a good job, if this trade is worth taking or not. So let me show you one of the examples, CDLR. So CDLR is one of the stock that I actually recommended. If you were here yesterday, right, you will know also CDLR is this particular stock that is doing quite well for quite some time already. So you may think like this counter anyhow suka don't know plug from where don't know where drop from the sky. There is a process, there's a very rigorous, thorough process that we go through. And actually for Felicia, she actually took about 3-4 hours or even 5 hours in order to like sort of figure out what is going on with the company before I actually take the trade okay. So let me show you one report, CDLR. So the report will look something like this. So Protege 9 Holding is my private fund company. So she's working for my private fund okay. And then you can actually see the trade report is very, very comprehensive So there is a quantitative analysis on why CDLR is chosen. Within the same sector, there is a lot of other company that is present. There's I don't know, Construction Partner, Mestec, Dicom, or I don't know but she will like within this list, right, she chose CDLR, and she will write a quick reason on why this was chosen. And then after that, we do a rough breakdown on the income statement analysis. And then after that, she will try to like figure out certain question like what is the reason for operating expense to double within a particular year. And then after that, she will go through the fundamental of the company to find out what is going on okay. So what is CDLR doing, and what are the expenses, profit loss. So it's a very, very thorough and comprehensive process that we go through. So if you are coming for the course, right, you are expected to put in this level of effort, and you are expected to write that kind of report, mainly because for Felicia, right, I have actually taught her the same thing that I'm going to teach all of you who are coming for the course, or all of you who have taken the course, okay? So all the trade, right, is not suka drop from the sky, or oh wow, this one bounce off the support, draw one line there, and then it's a valid trade already. It's more than that, okay? It's a lot more than that. So now going to some of the potential trade, right? Let's go through the long position first. So CDLR, definitely a very good long position. I will put my stop loss somewhere around 22.5 like that. Earning is coming up soon, okay? Earning is on 27th of August. But yeah, given how this stock is going, I can see it going up a lot higher. Okay, so now in the trade report, right, there's one thing I want to highlight here. Actually, is a lot of information here, but in summary, right, number one, they have very strong backlog, meaning and recently they have won a lot of contract as well. Secondly, they are expanding their fleet. They have all these ship okay, they have all these fleets that are constructing all these windmill in the ocean there okay. So when they are expanding the number of fleet, the fleet, right, it usually means that they have a lot of upcoming contracts coming in. They feel that the growth is there, that's why they are pumping in capex money in order to expand the fleet so that they can take up more orders. Okay, so it's usually a very good indication of growth coming in. And not only that, right, they are forecasted to have 225 millions in revenue for 2024. So in 2023, right, the revenue is only 109. So in 2024, they are looking to double the revenue, meaning to say the growth is 100% revenue growth. And same thing for their EBITDA also at 42 million. And they are looking for an EBITDA of 100 to 125 million for 2024, meaning to say they are looking to 3x their earnings also, 300% growth for their earnings also. So this is a very strong growth, and based on that, right, I think this can go a lot higher. So this is actually a very recently IPO counter also. Okay, so CDLR, something that you can consider. I personally will sort of like shortlist this first. I personally may not enter. That's because, as you can see my portfolio, right, I have 9 bullish position. So I want to get rid of some bullish position first before I enter that, okay? So it is, when I don't enter, it doesn't mean that the stock is not good. It's just that my portfolio cannot hold any more long position because the long exposure is too much really. Okay, next, on tech, there are 2 counters that I'm looking for tech. One is Teradyne. Teradyne was somebody mentioned Teradyne yesterday. I forgot who. I'm so sorry, but I was looking at it this morning, and it seems like a good, I would say, a good tech counter because the earning growth is still there also. And the other one that I mentioned is Digital Turbine, which also yesterday I mentioned this stock is kind of like bottoming and then it's recovering. So what I think is that this company, right, sooner it is going into profit, okay. Currently they are loss making, but soon they are going to become profitable. And when the stock from loss making become profitable, right, the growth is crazy, the stock recovery is crazy. So one of the stock that I can share is actually Palantir. Palantir previously was loss making. This whole stretch here, they were loss making, but during 2023, right, they become profitable, they start earning money already, and then you can see how the growth went. Currently, it is sitting at $30, okay? So I think Digital Turbine is also somewhat going to become like that, but whether or not they can actually become profitable, we don't know yet. But we have to sort of work it out a little bit more, okay? You can see they are loss making, so like they are loss making 25 million loss, okay? But I think as I mentioned, right, going forward, they can probably be profitable soon already, okay? So next is Pegasystem. So Pegasystem is also one of the tech company that is looking to become profitable. Okay, I think recently they have somewhat become profitable already. So you can see on here Q4 they become profitable with 140 million. And then after that, they went into loss making again. And then after that, become profitable again on Q2. But I do think that Q4 is their high earning quarter, okay, due to the seasonality factor. But I do think for this, right, the chances of them retaining that profitability is quite strong also. So maybe this is one of the long position that I will kind of focus on also. It is just in the beginning of the recovery process. If we were to go higher, right, maybe you can go to 120 or even challenge the previous high around 148 like that. Okay, so now I have presented three tech counters: Teradyne, Digital Turbine, and Pegasystem. So it doesn't mean that you anyhow suka enter all three, because if you enter all three, right, you are now overexposed to the tech sector already. So maybe you might want to choose one, or if you feel that, oh, I'm quite bullish on tech sector, then maybe you might want to choose two, but you need to hedge against those positions with some other short position. Okay, you cannot just all three tight long position go in, especially in this kind of volatile market situation. Okay, so don't anyhow go for all three. I mean, you go and pick and choose a bit. But of course, I will also enter my own pick, but maybe not immediately. Okay, I will wait and see a bit first. I will get rid of some of my long position and then I will start to enter them. Okay. So now on the short position side, I am looking at Alibaba and Home Depot. Okay, Alibaba mainly I am not confident in China market at all. In fact, I have not been confident for China market since like 2021. I have been shipping on China stock since 2021, but a lot of people like, Zor, you anti-China lah, anti this lah. But in fact, for those who have been with us since 2020, right, we actually trade Hong Kong market quite aggressively in 2020 and 2021. But towards the second half of 2021, right, we avoid Hong Kong stock altogether. In fact, we no longer trade Hong Kong stock. And ever since then, right, Hong Kong market have been crashing until now. Okay, very, very recently, the most recent Hong Kong stock that we took was JD.com, which was very profitable also, but we exited like quite a long time ago already. Okay, so now for Alibaba, right, earning is coming out next Friday, 15th of August, or sorry, next Thursday, 15th of August. And I am actually looking for a short position, more like a speculative earning play. Okay, I'm looking for a short position. We see how I can structure this. Okay, I will definitely be taking this trade on Monday or maybe by Tuesday, but I have to sort of like see how I want to structure this. And the other one is Home Depot. Okay, Home Depot is also is a US stock. I'm sure you all know Home Depot Okay, so same thing. I'm also looking for a short position on Home Depot. So now the theme between Alibaba and Home Depot is very similar. These are consumer retailer stock Okay, these are all those shops, all those products that people buy when they have a lot of spare money, spare saving, too much money, don't know what to do, go and rebuild your kitchen, remodel your kitchen, go and do your house gardening, or for Alibaba, you just buy a lot of random stuff from there. Okay. But if the consumer spending is weakening, right? If the consumer sentiment is going down, a lot of people are affected by the high interest rate, high mortgage rate, right? Then it is highly likely that company like Alibaba and Home Depot, they will not do well. Okay. So I'm looking for both short position on this two. And another short position that I'm looking at is actually Lockheed Martin. So now you may be wondering, wow, this one's so bullish. How come I want to short Lockheed Martin? So now the reason why Lockheed Martin is rallying this high is actually the flight to safety. Okay, the flight to safety, as in if you look at most of Lockheed Martin revenue, right, they are coming from government contracts. Okay, so for government contracts such as like defense contract, right, they are not affected by the cyclicality of the overall economy situation. It doesn't matter interest rate go up, interest rate go down, spending strong, spending not strong. In fact, the customer for Lockheed Martin is not consumer like you and me, it's actually the government. So they are not affected by the market dynamic. It doesn't matter market is in recession or is not in recession, the government is still going to spend their budget on companies like Lockheed Martin. Okay, so when the economy is not doing well, right, or when stock market start to decline or the risk assets start to drop, right, the fund will flow into more safer stock. And usually company like Lockheed Martin are the safer stock because the revenue is not affected by the cyclicality of the market. So we have all the funds going in. So it's more like a rotation, okay, rotation of fund from all the growth counter into what I would call the defensive counter, okay. So that is basically about Lockheed Martin. But what I'm seeing online is like very drama, like, oh my god, market is crashing, but Lockheed Martin rally, wow, World War III coming, oh my god, like this is the early sign of the big war. A lot of nonsense, really a lot of nonsense, okay. So it's just a simple rotation in the market. And the reason why I'm looking to short this is that if market continues to recover, if overall market sentiment improve, right, meaning to say the inflation is still going down, you can see ISM service improve already, unemployment rate start to come down, right? Then the market will chill a bit. They will be like, hey, actually economy not so bad, wow, why we sell down? And then what's going to happen is that people are going to cash out from Lockheed Martin, and the cash will start going into all the tech sector, all the growth stock, and then Lockheed Martin price will probably drop. So it is kind of a short position, but it is a short position because the economy is getting better. So it's a little bit like double negative like that, okay? So hopefully you can understand why I'm entering this stock. So a lot of people, a lot of traders, especially on Patreon, a lot of folks like to just see the trade enter, don't really think so much. But I do hope that by looking at this video, by coming for the webinar, looking at the recording, right, you can understand the logic behind why certain trades are happening and why certain trades are being taken. So once market shift, right, and when I start to exit, right, you will understand why I'm exiting, because the market sentiment has shifted to some other sentiment, okay. So it is kind of like very frustrating for me to see people asking, why are you exiting, why are you doing this, why are you doing that, when that topic has been covered in webinars. But it goes to show that not everyone watch the webinar. But I mean, if you are paying money to come here, right, I do think that there's a lot to learn from Saturday webinars, okay. So that's basically for Lockheed Martin. So now these three trades, right, I will definitely enter Alibaba and Home Depot probably for earning, but whether or not I will hold beyond earning, or like I will continue to hold for further downside, I'm not sure, okay. So it will be more of like a speculative play for the earnings, and then once earning come out, if the trade goes well, then good, like Bumble like that. But if the trade doesn't go well, then I will not be holding that stock already, I will just like exit the position, okay. But Lockheed Martin, right, if I were to play this trade, it will be more for a long-term hold, long-term hold as in like I'll probably hold for 2-3 months like that, because the next earning is on 22nd October. So I'll probably want to hold until that earning, and I hope that the stock can drop towards the ending earnings, okay. And then maybe on earning it drops some more, okay. So we can get a big profit. So Alibaba, Home Depot probably will be more of a very short-term 1-week speculative play. But Lockheed Martin, I'll be holding it slightly longer. Okay, guys. So these are all the stocks that I have in mind. So look out for Discord and Patreon to see which one I'm taking. But hopefully, even if I don't take certain things, right, you can decide for yourself whether your portfolio need that particular trade or not, okay. So now, before I end, right, I also want to announce that currently I have 25 people who sign up for my course already. So I was saying that I'm only taking 20 okay, but there seems to be a lot of demand for it. About 25 people have signed up. But the thing is that if you are really interested, right, do go and sign up for it, because yes, I have 25, but confirm chop okay, confirm chop, there will be a few people who last minute cannot make it or last minute got this got that, then drop off, those kind of situation But if really eventually there's so many people, then I may just take in everyone okay. I may just take in everyone if I have like 30-40 people, because I'm honestly also not sure if next year I want to give course or not. Because if like you can see, I give this one course, right, if you look at the calendar itself, I am out all the way until November, December already. Meaning to say that if I want to go for holiday, right, I can't go for holiday already because all the Saturdays are being blocked off already, okay? So it's like the last quarter of the final 3 months of the year, I can't do anything already. So is cost is something that I don't really like to give lah, but if the money is there, then I will take it lah. Okay. So if you are interested, do sign up for it because you are really going to learn a lot of things that is not being taught by anyone else in the market lah. Okay. So if you already signed up for it, I hope you are looking forward to the course also. So that's all I have for today. Have a good weekend, guys, and I will catch you guys again when market open next week lah. Okay, so we got inflation data coming out. So please don't YOLO too many things. Please don't have too many long position or what lah. Okay. All the best, guys. Have a good night. Bye bye.